Hi, Geraldine Carter here with 7 reasons that hourly billing is tragic for your tax practice. The first one is that hourly billing caps your revenue potential by way of number one, having a cap on the number of hours that you can bill in a year. So let's just say that you can bill 70% of the time you work. That's 1,400 hours in a year. Like it or not, there's just no way that you can get beyond whatever cap that you have in terms of how many hours you bill in a year. There's going to be a cap. The second one is that, of course, your hourly rate has a cap on it. So let's say anywhere between 120 an hour on up to 375 an hour, there is a cap to your hourly rate. There's a sort of socially acceptable range that professional service providers can reasonably charge for an hour's worth of their time. Think of a CPA who charges $600 or $900 or $2,000 an hour. You would get laughed out of the room at those rates. People wouldn't give you the time of day. Even if you were a great, the best, whatever CPA, you just can't, there's a cap on your hourly rate. So hourly billing caps your income in these two ways. The third way is that there's just no way to leverage an hour. In order to get paid for an hour, you have to work for an hour. So if you want to get paid, let's say your hourly rate is $200 an hour, the only way to get paid $200 is to work for an hour. You can't take advantage of these other revenue mechanisms, like, say, writing an ebook that you put online for $20. You sell 10 of them, you've made $200. It takes an hour to write an ebook. Maybe it takes 4 by the time you write it, format, put it all together, post it online. But if you're selling it for $20, all you have to do is sell, you do the math, you sell 100 of them, you've made 2 grand, you're now making $500 an hour. And the revenue just keeps trickling in without you having to do any extra work. Similarly, you could do a training with Q&A for an hour. You charge $99 for it. You have 10 people come. That's almost $1,000 for an hour of your time. Granted, there's some prep work, but you get the idea. If you don't believe me in theory, you could take it in practice. Listen to my episode 113 with Minnie Lau. We packaged her services, and she works for her clients 3 to 4 hours worth of work, $7,500. She's making anywhere between $2,000 and $2,250 or $2,500 per hour for delivering those consulting services to her clients. So packaging up your services is a fantastic way to get out of hourly billing. So there's no way to leverage an hour. In order to make $200, you have to work for an hour. You don't get to take advantage of these other ways to leverage your expertise and your time. Number 4, it misaligns incentives. So your incentive is to do a lot of work because you get paid more money. Your client's incentive is to have the work take the least possible amount of time. So that brings us to number 5. You have misaligned value sets. You have a rift of mistrust because now your client wants it to cost less, and you kind of subconsciously, I'm not saying you're doing anything nefarious, you want it to cost more. That creates a rift of mistrust, right? Your client is like, I don't know if he's being as efficient as he can be. In an industry that touts so-called trusted advisor, be a so-called trusted advisor, doing things to engender mistrust, like hourly billing, gets you out of alignment. It's sort of like saying that you are pro-peace and then starting wars everywhere. Those two things just don't align. So hourly billing creates mistrust, and it gets you out of alignment with being a so-called trusted advisor. Number 6 is that it creates downward price pressure for you. This is the worst. They're all bad, but this is terrible. It creates downward price pressure for you because you're not giving your clients, your prospects, a meaningful way to compare price, to compare value, so they compare on price. And the only apples they have in order to do an apples to apples comparison is price. So if they're comparing your price, your hourly price, to the hourly price of the CPA around the corner, they're going to say, that one's cheaper. Why not go with them? They're comparing apples to apples, not really, but it's the only thing they have to compare. So it creates this downward price pressure. And number 7, finally, is that it discourages improvement. Why would you invest in things that get the same result faster when that means less money for you? It discourages improvement, which is bad for your clients. So there are 7 ways that hourly billing is tragic for your tax practice. There are many more, of course. If you like this and you want more, and you want to know how to get out of hourly billing, subscribe to my e-newsletter. Start with my free 5-day email course. It's Better Pricing Strategies for CPAs, which you can do in multiple places on my website. That's it from me. Have a great day.